In 14 years of being in the stock market, I have never, ever seen a more perfect setup for an absolutely epic rally than what I'm going to take you through in today's video. I'm going to take you step by step on exactly what's going on here and how the market is setting up for potentially the most epic rally a lot of folks have ever seen. Now, this is a perspective you are only going to get on this channel. To be quite frank, every other mainstream outlet, every other single YouTube channel is just talking about depression, crash, all those sorts of things, right? You can't go on YouTube and miss it. It's everywhere. Boom, 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 boom. It's what everybody's talking about. You turn it on, the financial networks on television. It's all they talk about is downside bad things, okay? And we are in that moment in time in the market where everybody is only looking at things from the glass fully empty, not the glass half empty. The glass is fully empty to everybody's eyes right now. And I think they're missing a few very important things that I want to take you through in today's video. And I hope you enjoy a perspective like this. This is not an easy video to make when every single other person basically in the whole world right now is insanely bearish and, is just talking about crash and devastation and those sorts of things, okay? And so let me take you kind of through what we're looking at here, okay? Now, the first thing to understand is, this is kind of like setting up a rocket ship, right? And I've never seen a more perfect setup for this rocket ship to have some fun, right? But it doesn't mean it's an absolute for sure thing, right? We can still go kaboom in this whole situation. So that's something important to remember. The setup is perfect. Everything is destined in the perfect scenario, but just because we have that doesn't mean it's going to be a success, okay? Step one of these steps. Tank the market and tank the market fast, okay? And what have we done? We have tanked the market hard and fast. Look at this. The NASDAQ is down over 20% in less than 2 months. That's the NASDAQ index. That's an incredible move. If the NASDAQ was down 20% in a year, that would be an extraordinarily bad year. That would be one of the worst years you've ever seen in the NASDAQ, like certainly probably a top 10 worst year ever for the NASDAQ if you saw a 20% down for the NASDAQ. For that to happen in less than 2 months is extraordinary. It's nothing short of extraordinary. And that's exactly what we've seen play out, okay? And so that's step one of this process. To continue step one of the process, you have to look at an individual stock basis and some of the most important stocks in the stock market and see what those have done. Well, in less than 2 months, Meta stock has fallen nearly 30%, one of the most important stocks in the stock market. Tesla stock has fallen over 30% in less than 2 months. Shopify, a super high growth stock, has fallen over 33% in less than 2 months. AMD stock, one of the best companies in the world, has fallen over 42% in less than 2 months. These moves, right? Or like you never see stocks moving like this. These are the most important companies in the world. And these stocks have already think about this for a moment. These stocks have already gotten destroyed all of 2022. So going into this situation, those stocks were already down massively. And then they just went elevator down to insanely low levels. Like whoever foresaw AMD $50, and that's exactly what we got, right? Less than 2 months, that stock's now down over 42%. Nvidia stock almost 40% down in less than 2 months. For Nvidia, oh my gosh, you got to be kidding me. Apple stock, even Apple's gotten hit in this whole situation. And as I've stated many times on this channel, in the final phases of crash, you would see Apple and Tesla fall. And boy, have those babies fallen, okay? Look at this. In less than 2 months, Apple stock's down nearly 21%. In less than 2 months. That's a crazy big move for a stock as huge as Apple. Like, come on, a multi-trillion-dollar market cap. That's massive, okay? And then the next level is the small caps have all been dead and forgotten now at this point in time, right? I pulled up these stocks like the Planet, $1, Totally $2, Honest $3, Fubo $3, Chef $4. Palantir is not really a small cap; it's a mid cap. $8, right? Corsair $11. Like those stocks have just been completely forgotten in this market, right? So everything's been thrown out now at this point in time. Doesn't matter what you own; it's been basically thrown out in this whole situation, except for Elf stock. Elf stock might be the one that's held up well. Okay, so that's step one of this process, okay? Step 2 to create a potential epic rally is you need expectations, especially around inflation, because this matters in a significant way. This is what everybody's looking at in the market, okay? And we got inflation numbers about to come out. Now, as far as expectations here, people expect everything to get worse, okay? On a monthly basis, the CPI is expected to rise 0.2%. The core CPI, which excludes volatile food and energy prices, is expected to have risen 0.5% last month, which is below August's 0.6 rate. Headline is expected to be at 8.1% year on year versus 8.3% in August, while core is expected to be 6.5% year over year versus 6.3% in August. So the expectations for CPI are definitely that it's not going to be a good situation, right? And if you're talking about going into the CPI read, something very important for everybody to understand about this situation, right, is we've gone into past CPI reports in a situation where the expectations were, hey, things are going to get a lot better, and we got just disappointment, right? And it was like, oh, yeah, things didn't get better at all. It got actually far worse, okay? So in this situation, at least people are expecting things to get worse going into this CPI report, and you tack on a market that's been devastated going into this CPI. Okay, now we talk about a potential for a rally on the other side in step 2, okay? So that's very important in regards to this whole situation. And once you begin to obviously have the disappointments around CPI become less, then guess what? There's the potential that the Fed down the road at some point in 2023 will stop raising rates, which I think the market's obviously looking for, right? Step 3 of this process. I'm going to take a moment to tell you about MooMoo here today. MooMoo is one of the fastest growing trading platforms out there that is commission free. Listen to this. Through my pinned comment down there, if you just set up an account with them, you get a free stock. If you deposit $100 or more, you get 5 free stocks. And if you deposit $2,000 or more, you get 15 free stocks. Yes, you heard me right. Up to 15 free stocks, which is absolutely amazing. And think about the sort of market we're in right now. It's a very down market. If you're going to get free stocks, this is a pretty good market to get free stocks versus one that's high flying. MooMoo is a commission-free trading platform for stocks, ETFs, options, ADRs, and OTC. It's owned by thru, which is a NASDAQ-listed fintech company. It has up to 18 million users with SIPC insurance protection. It's safe and secure. They also use AI-powered insights, pro trade tools. You can also get free real-time level 2 market data, which is pretty darn amazing. MooMoo also has a feature which is earnings calendar, which is very helpful for the next month because there's about to be a lot, and I mean a lot of earnings coming. Investors on MooMoo absolutely love the platform as well. It gets a 4.6 out of 5 stars on the iOS App Store. So make sure you click that pinned comment down there, guys. It will also be the first link in the description. Set up an account with them, get your free stocks, and enjoy the MooMoo platform. It is pretty darn awesome. Is you want to tank the market into earnings and basically set up the market with very low expectations for earnings. And that's exactly what we've done. I just, took you through stocks. I just took you through the market and how bad the market's been, right? Over the past couple months going into these earnings, right? So now we're about to have earnings season start. Tomorrow actually is a real start for earnings season, in my opinion. You have Fastenal report earnings. You have BlackRock report earnings, who's pretty much got the most assets of anybody under management, right? You have TSMC report earnings, and then Friday you get the big banks, right? JP Morgan's going to be reporting earnings. Wells Fargo's going to be reporting earnings. Citi, PNC, US Bank Corp, and then you're going to get Morgan Stanley as well. So big financials day there, right? And so you tanked the market into this situation. And what happens if companies report decent numbers, have decent commentary as earnings season goes along? Oh boy. And your expectations are already on the floor for these companies and you've already crashed and collapsed their stock prices, right? Okay, now we're talking about step 3 being very interesting going in. And now, in order to tank those stocks more, you have to have these companies all report horrible numbers, way worse than anybody expected. And you have to have them have horrible commentary that, it's like doomsday for their businesses. So if you don't get that, then you're in another situation for the potential epic rally there, okay? Step 4 is around sentiment for the stock market, okay? And you can see this in the latest numbers of AAII over the past few weeks, right? I mean, look at how many folks are bearish on the market. It's an incredible amount, right? I mean, we're talking about 55, 60% of investors are bearish on the market. Those are among the highest numbers you'll ever see in the history of the AAII investor sentiment, which goes all the way back to the 1980s. Think about that. We're in one of the most bearish moments for the market ever. Literally ever. That's extraordinary to think about, right? And so sentiment has gotten so negative, right? Remember what I talked about at the top of the show, right? I talked about if you turn on the financial networks on television, just negativity everywhere. Every guest, just negative, negative, negative stuff. You turn on YouTube, depression videos, stock market crash videos, market crash videos, boom, 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 it's the end of the world, da, 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 right? Oh my gosh. So everywhere you turn, it's negativity everywhere right now. I mean, everywhere. So we're talking about an overwhelming sentiment of negativity, of bearishness, of I don't want to buy anything, I don't want to see anything, okay? That creates a very interesting dynamic there because you very rarely get that. And usually when you get that overwhelming amount of bearishness, you're usually very, very close to a bottom in the market and potentially an epic rally. And that's something we actually saw in March of 2020, right? There was overwhelming bearishness in the market then, right? And obviously at the end of 09, or the beginning of 09, you saw overwhelming bearishness in the market. The number actually hit 70% bearish the week before the market turned. Think about that for a moment. That's pretty crazy to think about, right? So step 4, very important there, okay? Now, step 5, alrighty, step 5, heavy shorting going on. One of the most reliable stock market indicators, short interest ratio, is near a record high. This person says it's a bearish omen. It's actually an extremely bullish omen. I'll drive you through that in just a moment, okay? Investors are betting heavily on a decline in stock prices. They're usually right. Not really. I'm going to show you that here. This gentleman totally read this chart wrong, and it's not for me to tell somebody that they read a situation wrong, right? But I'm going to take you through exactly what's going on here. Okay, so check this out. Basically, this is short selling, right? And where short interest ratio stands relative to the underlying trend. And so what's interesting about this is you see extremely heavy shorting, right, at kind of like early to mid 09 there, right? And so therefore, somebody could look at that and be like, oh, they were so smart. They shorted the market when they knew it was going to go down. Well, here's the issue. When the market actually started to crash, right, which was 08 and into the beginning of 09, actually very few people were short. The short interest ratio is actually extremely low while the market crash is actually below trend for almost the entire crash. The crash did not happen here. The crash happened where I have the red right there, okay? So think about that for a moment. People got way too excited way too soon in that situation. And then short ratio actually was very, very low while the market was actually in crash mode. This is when the market was actually crashing. And where were the shorts at that moment in time, right? Which is just crazy to think about, right? Not only that, look at this. Look at basically since 2013, we've had abnormally high short selling activity in the market, right? And what have they gotten? Destroyed, to be quite frank, right? Destroyed. And look at this, okay? You can't make this stuff up. I mean, this is incredible. So look at where short ratio was in 2021 and going into 2022. Insanely low, which once again, investors got it totally wrong, right? If anything, what this should have been, right? What this should have been is the short interest should have been like up here going into the situation, and it wasn't. It was actually incredibly low. So which means these traders, these folks that like to do this, right, which I'm not the shorting type, right, but these traders that like to do that totally got this wrong. And they always get it wrong. Look at, they were short and heavy here, got that totally wrong. Here, they got that totally wrong, right? And so now they're going crazy with these shorts. Do you think they're going to be right this time? 7 times a charm, maybe? Maybe this is the time they got it right? They did not get it right here. They got it wrong. If they would have kept shorting like insane here, they would have got it right. They would have been right on, but they weren't, okay? And so, I wonder what's going to happen here, right? Maybe think about this for a moment. Imagine this market just slowly starts to turn bullish, right? Slowly starts to go positive, right? Then you have fund managers that are underweight, extremely underweight right now, have to start piling in, buy up stocks. You have people very heavy shorted, put options, things like that, right? That are also having to flip and buy back stocks, which creates more buying momentum and causes more shorts to cover. Oh my gosh, okay. if you want to talk about setting, like the ingredients to set up for an insane rally here is ridiculous, okay? Absolutely ridiculous. So maybe this is a one-time the shorts get it right. Maybe it is. Or maybe it's just another situation where folks pile in at the wrong time to the wrong side, as they always do. And remember where folks were piling in late 2020 into early 2021, where were people piling in? It certainly wasn't shorting stocks. Heck no. It was into, obviously, everything that was, risk on at that moment in time, right? And that didn't pay off so well, right? So we'll see. Are they going to be wrong like they're always wrong, or is this going to be finally the time they're right in this situation? Time will tell there, but I can tell you that's step 5 of this process, okay? To continue on to step 5, look at this. Put purchases increase. So basically, put purchases are about the highest we've seen since March of 2020, roughly there, right? So, that's interesting. That's interesting. What do we think is going to play out there? I don't know. That's just interesting that's playing out in the market, right? Retail investors, do retail investors usually pile into the right things or the wrong things? Just think about that for a moment, right? And, the folks that watch my channel, you guys are like a million X more educated than the average retail investor. And good for you guys, right? But if you think about the average retail investor out there, like just think about it practically. Do these folks get caught up into the wrong stuff or the right stuff? Okay. And most of the time they get caught up in the wrong stuff. And so I was speaking to a friend about this recently, right? And I was saying the retail masses, they go to wherever it looks like easy money. Okay. And so at the end of 2020 and into early 2021, everybody was piling into stocks, and obviously because you could just go long, and then they started to pile into call options because they're like, oh my gosh, everybody's making so much money for call options, right? And now where's the easy money been made? Certainly not long. It's been made on the short side, and it's been made on put options, right? So if you're an average retail folk, right, and you're looking at this and you're like, oh man, I can make such easy money on these put options. People, if you see a stock price goes down 5%, that likely means that put option's up 20% in a day, 25%. So all of a sudden, a lot of these retail folks start going, my gosh, people are making easy money out here. I need to start doing that. I want to make 20% in a day. All I do is lose money on my longs. Let me start loading up on put options. Let me start shorting stocks, because look at how easy it is. And it does look easy, doesn't it? In 2022, where's the easy money been at? Puts and shorts. It looks so easy. Oh my gosh. And retail always gets attracted by easy stuff, right? And a friend said to me, he said, well, I don't know if they're sophisticated enough to buy put options. I said, you got to be kidding me. How many retail folks have options set up on their Robinhood account? Are you kidding me? That's nothing to set something like that up, right? It's not rocket science to buy a put option. You break, you can do that in 1 minute. Come on, man. And so, I wonder what's going to play out there, okay? That's interesting. That's step 5 of this process, okay? Next step. I call this final step, okay? It's very important. So, think about this for a moment. We know that seasonally, November and December are usually great months for the stock market, right? But not only that, not only are those months usually good for the stock market, we're in a midterm year, which usually in midterm years, November and December are phenomenal for the stock market, right? So Wall Street's also keeping that in the back of their mind. They're like, okay. And on top of that, if you are somebody that is of the belief, right, which these people are kind of I call them they might be the quiet minority right now in this situation, right? They're looking at this and they're probably thinking about these things, right? They're probably thinking, okay, very high probability we could get a nice rally into November, December, right? So if you're of that thought process, right, you need to start basically loading up on stocks in these weeks here. So you're already getting prepped for that November, December rally. You got to be ahead of time, right? So if you're going to be ahead of time, you get in, you start building your positions out a couple weeks before you get to that moment, right? Which once you start that momentum, then you start potentially forcing short squeezes. Then companies don't report it's the end of the world. That produces more short squeezes. That produces a lot of people that are underweight, a lot of these funds underweight to start coming in, having to buy equities, right? Which causes more folks that are underweight to say, oh my gosh, I'm missing the indexes now. Now the S&P is kicking my butt. If I'm not going to get my bonuses, or I'm going to lose clients if I don't do something here, I got to start piling in, right? And all of a sudden you get dominoes, and it doesn't change actually that long to change sentiment. And in a matter of all of a sudden 30 to 60 days, you can completely change sentiment in the market. The reason everybody, you go on YouTube, everybody's talking negative. You turn on the television, on a financial network, everybody's talking negative. The reason that's going on is because the market's going down. As soon as the market switches, starts going up and up and up and up and up, guess what? All of a sudden, people start kind of taming all that negativity down. All that stuff, they start taming it down. And all of a sudden, they start going a little more positive. Because all of a sudden, it's not as interesting, right? If the market's going up, you can't be talking about depression and the worst crash in history and all those sorts of things, because people start to look at that and they're like, it's not as appealing to me now because that's not what's playing out in the market, right? So you get a very big shift there that I think is very, very important, folks, okay? And so that is why we are setting up for an absolute epic rally. We'll see if it comes, but the setup is the best I've ever seen in 14 years of being in the stock market. This is the creme de la creme in this situation. So we'll see how it starts playing out as soon as literally next week. Like next week is as soon as we'll start seeing that play out. What can happen in the short term, kind of CPI day, and then that first earnings day, I would kind of almost disregard that a little bit. You're really going to want to look to next week and the week after as kind of being those weeks that are going to indicate like, oh boy, I think we're on pace for this kind of epic rally. And am I playing any call options or anything short term around that? No, absolutely not. I don't do any of that short term stuff. That's not my game. Okay, I'm focused on longs, but I'm very aware of everything going on out there, and very aware that we are setting up for potentially the biggest epic rally in a 2-month span that I've ever seen. So we'll see how it all plays out, okay? Hope you guys enjoy this as always. Make sure you check out MooMoo. That will be pinned comment down there and get your free stocks. Much love as always, and have a great day.